Welcome to Incredible Bankers Learning Club. Today we will be discussing about a brief history of modern banking and its evolution in India. We shall also briefly cover what are types of banks in India as on date. India saw growth of modern banking in 18th century with setup of Bank of Hindustan in 1770 and General Bank of India in 1791. Subsequently, Bank of Calcutta in 1806, Bank of Bombay in 1840 and Bank of Madras in 1843 was set up by Presidency. These three banks were merged in 1921 and named as Imperial Bank of India. The Presidency banks acted as quasi-regulator till setup of RBI in 1935. Chartered Bank of India, which today is known as Standard Chartered Bank, was set up in 1858. This was also the phase in which country saw an spurt in foreign banks setting up their businesses in India. From middle of 1800 till independence, India witnessed growth of banks being set up. During Swadeshi movement between 1906 to 1911, numerous banks were set up by politicians and wealthy businessmen. However, during World War I, more than 90 Indian banks were closed owing to a major downturn in Indian economy. During this phase, a lot of Indian banks failed and had to shut their offices. However, pre-independence, Reserve Bank of India was set up in 1935 as regulator and got more teeth with the passage of Banking Regulation Act in 1949. However, in this phase, Allahabad Bank in 1865 was set up, which was one of the oldest joint stock bank till it merged with Indian Bank in 2019. An Oudh Commercial Bank at Faizabad was set up in 1881, which was first Indian joint stock bank. However, it later failed in 1958. Post-independence was the time of consolidation and reforms in Indian banking industry. In 1955, Imperial Bank of India was transformed to State Bank of India. SBI Act in 1959 was passed, which resulted in 8 state-controlled banks becoming associates of SBI in 1960. During rule of Indira Gandhi, with objective of bringing better government control, 14 largest commercial banks were nationalized in 1969. These banks held closely 85% of public deposits. Later in 1980, another 6 large commercial banks were nationalized. In the phase of liberalization, UTI Bank was set up by LIC and UTI Trust of India in 1993. Later in 2001, it merged Global Trust Bank and renamed itself as Axis Bank in 2007. During the same phase, ICICI Bank and HDFC banks became the first private banks to receive RBI nod in 1995. In 2001, Kotak Mahindra Bank was formed. This was the first time an NBFC got the banking license. 2005 onwards, multiple regional rural banks were formed to focus on taking banking penetration to rural area. To focus on the same, RBI subsequently in 2015 came up with differentiated licensing in the form of small finance bank and payment banks. In India, there are multiple types of banks as per banking regulation. Most common term heard by one is scheduled commercial bank. Banks with minimum capital criteria, finding its name in second schedule of RBI Act, are known as scheduled banks. These banks are also eligible to take loans from RBI. The next category of bank is commercial bank, and as the name suggests, these are for-profit banks and could be scheduled or non-scheduled both. To ensure rural penetration of banking services, regional rural banks are set up by government. These banks are scheduled commercial banks and regulated by RBI. Another category is cooperative bank, which are not supervised by RBI, but the responsibility of supervision is with respective states. RBI also came up with differentiated banking licenses in 2015, which gave birth to small finance banks and payment banks in India. Small finance banks, as per the regulation, need to lend at least 75% of their net bank credit to targeted sectors, also known as priority sector, and would have majorly presence in non-metro cities. On the other hand, payment banks can only facilitate payments in digital manner. They are not allowed to assume any credit risk on its customers. Thank you for watching this video. Please subscribe my channel for watching upcoming interesting videos.